Hello. So we had two trades that absolutely exploded from the watch list today. One of them was OMH. We're going to jump right into that, and then we're going to get into the three stocks you need to watch for any and all options traders. You absolutely cannot miss them. They are great setups. I think are going to pay off over the next month plus. So taking a closer look, we had OMH. This one absolutely blew up, hit a high of $57 from as low as $13.99 just a day ago, and as low as $5 on the 4th of May, meaning this thing was up almost 1,000%. Absolutely unbelievable. I think it's topped out for now. If we can hold above $19, I think there's still a chance for more upside. But if you missed it, you missed it. Don't get caught holding the bag. Secondly is ELOX. This was a great day trade. I believe Lee alerted this over a break of $7, traded over 100% up to 1478. It has since come down and will likely come and settle at the top of this range around 743. So as always, trade smart, be safe. Don't take these if you're not willing to take the risk. And more importantly, if you don't know how to day trade with execution and precision, I wouldn't take them. Beyond that, we're going to go into what I think are three of the bigger and best options trades for the next month. Starting off, number one, that's not it. I'm just going to type it in. There it is. Target. Very interesting day today. On the hourly, we climbed above that 200-day EMA. For those of you on the stream last week, you saw me talking about this channel right here. That is very important for Target because if we cannot hold up in our current price range above 152, we are likely to come back down and test the bottom of the support range, meaning the long trade we're looking at is to the upside. If we don't get upside, then why be in it? Let's go puts. But I think that we are approaching what is the 200-day EMA on the daily, which is about 164 bucks, almost 165. That is a very critical price point here for this to go over. And after that, we need to see it break out of the top of this channel. Again, if I zoom in a little closer, you can see that this line is coming right across the top, intersecting with the EMA. This is our trend channel, these two blue lines. We have significant volume inflow today. RSI is looking good, but we're not ready for the trade yet. I don't think it makes sense yet because we want to take maximal opportunity with minimal risk. And those are always going to be the best trades. We're going to make the most money. Let's get into it. But first, let's see some introductions. How y'all doing? I see we've got almost 20 of you in here. Feel free to like the video if you like what you're hearing and you want more of it. Subscribe to get all the notifications for every time we go live to day trade, cover options, or trading course material, etc. I know there's a few of you here, so please feel free to jump in. Let us know how you're doing. If you're from the Discord, just type your Discord username. If you're new, type new because we are going to be giving away some free stuff. Everybody loves free stuff. We got Dr. Doctor. He said we've been eyeing Target 2, earnings Wednesday, see where it heads. Exactly. So that's why I am saying right now this is a hold, wait, and watch because we have this huge gap here stemming down from 207 bucks. Came all the way down to 134. Incredible buy opportunity if you got it. If you didn't, the opportunity is still there. We just have to wait until the timing is right. I want to see this over 165, and then we need to break out of this trend channel. We can see that back here in mid-April or so, we hit our heads against this a few times after breaking above it just the 2 months before. We have to see this break. So I would say call that a high of 170. Let's say target over 170. And this starts to look like a very attractive options trade back up to $200. I'm going to be looking at the $200 call. I think it'll have a significant amount of volume. I want to have at least 6 months to a year of expiration. I'll probably lean more towards a year. If you're thinking in your head, oh, it's too expensive, I won't be able to trade that. Nonsense. Vertical debit spreads are your friend, and they will rescue you from the prison that you're in right now. Dawn, what's up? How you living, Dawn? Appreciate the follow. Junkaboo, hey there, baby. Nathan, how you living? Garav, hello, sir. How you doing, my friend? As always, if you're from the Discord, type your username. If you're not, just type new. Again, we're going to be giving away some free stuff. I wanted to continue here on this target trade as long as everybody here is ready. Are you ready? That's the question. Three. I thought my mother-in-law was going to watch kids a little longer than she is, hence why we're starting early and a little thrown off by Mother's Day. I hope you celebrated your mothers. If you didn't, send them a message to let them know how they're doing. Mothers are wonderful. They're the reason we're here. The world doesn't exist without them birthing us. So let's celebrate them adequately. Snowflake driving to the ball game, listening. Won't be typing for a few minutes. Understood. Glad you're here. Meta Matt, you should be sharing this video out, not wasting your time in here commenting, guy. Just kidding. Hey, how you doing? But get in there. Get in there. Get in there, coach. Get us some action here. So, target. Again, we want to see over 165. That's what I would suggest you put on your trading brokerage. You can just simply set an alert that says, hey, over this price, I want to be notified. Make sure you set that notification so that you are aware, present, and getting it. Once we go over 165, we need to see a significant push over 170. That is going to be when, in my opinion, is the best time for me to layer into that position. We saw some very, very interesting gap up movements here up to 190. We need to be very careful that we don't see another push up to 180 and then a rejection and then it tanks. We don't want to see that because we're going to be taking a long calls position. But as I said, if you think it's too expensive, you're wrong. And here's why. You can create a vertical debit spread. Here's what that is. A vertical debit spread means you are buying long one option and you are selling short the other option, right? So if you buy the $200 strike, you're going to sell the $201 strike if it's available. If not, it'll be like 205. In doing so, you decrease the cost of trading the long-term option significantly. All you're paying is the difference between the long option that you're buying and hoping goes up and the short option, which will, in theory, go up, but it will lower your cost significantly enough that, for example, if a $200 call was trading at $2,000, you know what, let's just look. Let's just look. Let's just look at what they cost. Let's look at all options. So if we're looking at a target options trade, I like January 19th. That's over $200. These are quite expensive. So for instance, oh wow, the 200 call is actually quite affordable. It's only $470. I know that sounds crazy, but say for example, you go long on the 200 call, and to create a spread, you sell the $210 call. That puts you at a total price of about $175 per contract. Meaning, those of you that are sitting there saying, I don't have a couple $100 or $2,000 to throw in, or I only have $1,000 in my account. I don't want to destroy it by betting a quarter of it on one trade. Good. Don't do that. That's smart risk management. Let's teach you how to do it. So what you're going to do is you're going to buy the long, you're going to sell the short, vertical debit spread, bing, bang, boom, done. We're not going to get into specifics of the contracts right now because the alert is not there. The chart is not there. We're just waiting, watching, and we're going to strike at the right time. So once again, to wrap this up on target, we are looking to set a price alert, set it on your brokerage. When this breaks above 165, you want to know about it. At that point, you look at the chart, you and I have a chat, and then we look at this upper resistance around 170. Once that breaks, we can start layering into this position, at which point then, here's my long-term idea is very simple. It is quite simply that we are going to retrace to the end of this head and shoulders, which was the highest point if you go back in time, which is at about $230. I think Target's going to get back there. We're going to wait also for earnings to be posted, as the good doctor said, which are coming up in the next week. We want to see how those earnings are really reflected in the trading price of the stock, which, as you all know, good earnings can mean bad price action. Bad earnings can mean great price action. It's just the way of the road. But we have a pretty stable support base from the gap up. If you look back here in time, we have about 140, 141. I think we're going to hold pretty stably there. It's a pretty consistent support. If we come back down there, that also might be an opportunity to layer into a long call at that point in time if that support holds, because it's our pivot point. So if it breaks, we're just out of the trade. We lose a couple percentage points. But if it goes, we entered at the absolute bottom, maximum upside. Everybody wins. Everybody's happy. Moving on to the SPY, the good old S&P. We're going to go back to the weekly chart here because we want to get a little better look. We're going to stretch this zone out. Stretch it on out. So today's volume was not great. As you can see here on the daily chart, weak volume compared to the past week, 2 weeks, 3 weeks especially. What does that mean? Does that mean we could trust the candle? Well, we can, because it's the price action. It's the price action. And to be honest, I would argue that the candles do the best as far as predicting how this chart's going to play out. I trust price action over everything. However, A component of that is looking at the volume to understand how much can we trust that price action. For instance, if it held up today above support with unbelievable volume, I'd say bull run, let it ride, let's go, let's see it. That didn't happen, so I'm not saying that. What I am saying is that we are still bullish neutral. This is holding up for now. You can see it's above the 8-day EMA and the 13-day EMA. RSI is trying to stay above 55. We have a very significant resistance as indicated by this red line here on the chart that we have to be aware of. Put this on your chart if it's not on there already. This is our pivotal resistance before we possibly, even quite possibly, enter another bull phase on the S&P, which, as you can see, are pretty profitable, going 376 to 415, and then most recently 379 all the way up to about 417. So you're seeing these $20, $30 price swings, which gives you a lot of potential leverage for options trades. We want to see a break above that because then we will take a larger position aiming for this next resistance with at least a higher degree of confidence that we're going to see some upside. So for now, I just want to see continuation on this buy. I want to see it open and close above 413 tomorrow. That would be ideal. If it does, our next level of resistance is this right here, as we see on this inverted hammer right here. Never good on the upside, guys. Whenever you see an inverted hammer at the top like that, it's almost always an indication that we're going to see some downside in the next trading session or next couple trading sessions. So what we want to do is see one of these full-bodied green boys, right? One of these full-bodied green candles right here. We want to see that push above or at least to about 418, at which point then we have our next resistance, I would say about 426. And then we talk about that $430 price point on the SPY, critical. We've talked about it for months and months and months. Why is it so important? I believe that to be the long-term tipping point between bull and bear for the next couple months. Everyone's worried about recession. You always need to keep that on your mind. Everyone's worried about just monetary concerns across the board. Was the Fed going to cut rates? Are they going to cut rates? Is it ever going to happen? Is money going to continue to be this expensive? And how much will it slow the economy? Questions that we all need to be wondering about. However, one small theory that I've been developing over the last couple months is that the lack of capability in buying housing actually could potentially stimulate the economy even more in terms of like small time consumer goods and services. Will people spend more money week in, week out at local business with companies like Target, as we mentioned, because they're not levering themselves to, say, purchase a home and they have a large mortgage payment? That's the question that I'm wondering, and I think we're going to see it play out over the next couple months. If it does play out in our favor, then we might see actually a pretty decent bull run here. Everyone's terrified of inflation and recession and everything else, but that is I would argue that is probably one counter theory that I think has some weight to it, that I'm just waiting to see if that plays out, because that's going to really guide our direction going forward. So once again, to wrap on the SPY, we want to see an open above 413. If we do see a strong open above 413 and markets just humming green, I could very well see, if we're going to go down a little more of the 15-minute chart. So if we open above that price, I think it's possible that we see a pretty strong push into the open, testing this resistance right here, 413, and then we come back down to earth. So we test that 413, and then we come down and possibly test that 412.35. As you can see here, we have these lines drawn across the top. These are indicated ranges that it's probably going to trade in based on the past price action. I think this one, about 412.30, is a pretty critical one. Above it, then we can look at some short-term bullish positions. Below it, then we look at some short-term bearish positions down to 411. If it goes below there, then we look at 410. And we just trade these levels as they go up and down just to make money here and there while we wait for the big opportunity for the larger portfolio decisions, such as a long-term swing trade, as I mentioned earlier in the video. So when the SPY opens up, we are hoping to see just a neutral open with a little bit of strong volume, or right as the market begins to rip, and see a test of 413, at which point those 413 calls, given 2-3 weeks expiration, should sit for a nice day trade for everyone. If it does not, or it gaps up and opens at 413, I think taking some 412 puts could pay off pretty handsomely. Again, buy a couple. If I'm buying these trades, it's a couple weeks out. I'm not doing same day expiration. We're not doing any of that craziness, unless you're a very skilled trader that knows exactly what they're doing. I'm liking the consolidation we're seeing here, though, between 413-ish and then call it, 410, 411. I think that's pretty important here, because we want to see some consolidation on the chart, which we have. Huge head and shoulders played out there, off to a double bottom setup. We have a pretty major consolidation area that we're trading through, so we don't want to take any big trades either way because we know right now it's going to continue to sit in this channel, and I hope that that makes sense. If it's trading in this range over and over and over and over, we don't want to take any long-term positions at that point. We're just looking at short-term swings and day trades. That's the only thing that makes sense in this kind of chart because it's telling us, hey, I'm just going to trade in this range right here, man. I'm not going to go above it. I'm not going to go below it. So you don't want to be trading options far outside that range because you're just going to lose money. And I don't want you to lose money. I want you to make money. I want you to get rich. I'm going to put the link here for those of you that aren't following and haven't gotten access to the free weekly watch list. And I believe we do have some daily watch lists there. I put the website in the chat. It's PB Peter, P is in Peter, B is in boy, alerts, plural.com. Create your free account. No money needed, no credit card needed, just an email to send your verification to, and boom, you've got access to the watch list and a number of the other free trades that we send out every week. And if you're also not in the Discord, you definitely need to join. I'm going to put that link at the very bottom. That is where you get access to the free trading education content, the live alerts, the one-on-one question and answer, everything you could possibly hope for to learn how to trade, to realize that this is a sustainable goal that you have in trying to build wealth for yourself, your family, whatever. And the only way to do that is through understanding how it works first, then understanding what strategies you can use, and then understanding how to execute them. That is the key to any successful business. And that's essentially what you're doing is starting your own business. You need to learn what it is. What does it mean for me? How do I use it? That's it. That's all. It's not that complicated. You can and will make money if you follow a few simple rules, simple things. So make sure you get access to those free watch lists because they absolutely slap. We're also going to look at Tesla. This is not one of those stocks right now, I think, that I'm particularly excited about. If we go to the daily chart here on Tesla, very interesting bearish action here. A little bearish neutral, but bearish. And as we can see, we closed below this major support we needed to hold right at about 166 and change. No, 167, excuse me. We lost it. So what's going to happen next? Well, we tested support at 152. I think it's saying, hell, let's test it again. And if it does, I think that would be a very interesting place to start looking at a longer term position if we consolidate. Remember, we drew these lines for a reason. We want to see price consolidate between 200 bucks and 157. If it does, that's setting up to be a very healthy chart because we ripped through this area before with no consolidation. We don't want to come to 130 and consolidate. We want to consolidate at a new high. Look at it this way. You're just basically setting these stairs to be able to walk up in the future, right? So if it consolidated on these lows right here around 130, we don't want to see that again. We want to see it consolidating on a new higher low, which tells us that the long-term outlook on the company itself is bullish. This is what we desire. One other non-watch list, but interesting, CVNA, Carvana. I'm sure a lot of you have traded this, looked at it, seen social media posts about it. You saw it on the live stream last week. We covered it. Unbelievable price action. We talked about that breakout over 10 bucks. It ran to about 1386, which means you had about 30% profit there if you took a trade like that. It was not an alert. I just threw it out there for those of you that were trading it. RSI is holding up above 57. Very good. We want to see it always above 50, ideally above 55. That's kind of stacking it in our favor if we're taking a long position. We have a pretty easy zone right here that I think that we'll see a lot of liquidity through, and the price can move up quickly if it can push over 17 bucks. If it does, I think this thing could easily go to 20, 25 bucks if it continues to have that meme stock pizzazz to it. If it does not, then it's probably just going to die and shrivel and be terrible for everyone that got into it. So watch that very closely. Keep a very, very, very close eye on that. I do not think that's the best opportunity for a trade at this current moment, but I know a lot of people have been asking, so I wanted to quickly cover it. Last but not least, Snow, S-N-O-W. This daily chart is absolutely exquisite. Remember, we talked about it on the prep live stream Friday in the Discord. For those of you that were there, we wanted to see a strong push up today. That's exactly what we got. I really want to see price over about 178, 180 though. If we look, we've got a range here, right? So like 180 was significant resistance here, support, resistance, resistance, and then we didn't touch it until we found resistance there again, not finding a higher high back in the middle of February. So we see consolidation happening here. This chart looks wonderful at 135. It was really just consolidating over time. We have basically since June of 2022 been consolidating in this range, which is awesome. But as I just said on the other one, we don't want to be loading into these long-term plays in a consolidation area because it defeats it defeats the literal purpose of what we're doing in a long-term trade. We're trying to capitalize on compounding growth over the long term. If we know this stock is going to just continue to trade in a range, why would we aim for any long-term compounding growth that we're not as likely to get until it breaks out of that range? We're just basically, remember, with options, there's theta, that's time decay. We're basically just losing money by buying too early and waiting, which we don't need to do. We're also taking an insurmountable, but we're also taking, it's not insurmountable, but a larger amount of risk that we don't have to take. So why take it? Why do that? Why do all that? We don't need to do all that. Oh, Peepee's in the chat. You want a Big John prediction? Well, I don't know. Let me take a look at this right now. Take a look at this screen. See what's on there right now. Well, we crushed the Riot and Mara trades. Remember, we said above $8, it was a buy. Those both ran to, I think, 13, 14 bucks. It was almost 40% return on that trade. Those are swings. They were great. NIO is actually looking pretty quality here. If it stays above $8, I think it's very well going to continue to the upside for a while. I really like, as always, that chart. I love those setups where you have a nice amount of consolidation over a period of time. That's telling you that something's really going to happen here. One that's pretty interesting, that's risky, but has a series of, I would argue, pretty explosive moves is actually this one. I don't know anything about the company. I'm not saying that this is going to be quality. I'm saying, look at what happened here. Probably, yeah, definitely reverse split. We have to go to the hourly just to see anything because it's so bad. So it was down to 90 cents, pushed to $4 in the matter of a day on significant volume. Then it went to 127, pushed to 297 on somewhat significant volume, but not nearly as much buying pressure as we saw back on the 17th. However, I think if it can break above this 200-day EMA and kind of hold above 178, I think there's a lot of potential here for this thing to absolutely rip. So that's definitely a watch list item that I would put at the top of the list because I think that that's going to be very interesting. So one other that I wanted to take a look at that has absolutely gotten beaten down is Pinterest. So again, from fall from grace, 27 down to 20, not good. If we look at the weekly chart, this thing is a Christmas tree, and this looks like it could be shaping up to be the right shoulder of an absolutely massive head and shoulders, which means it's going to come back down to maybe even $10, which would be terrible. However, I do like this rejection here right at the bottom of the RSI, and again, we're seeing the confluence we want to see. So lower low, higher low, higher low. That's good. That's a good thing. I would also say that look at the RSI here when it was trading at around 19, 20 bucks. RSI was at like 40, which is crazy to see that RSI came all the way down to about 32, even though price didn't depreciate below this low. Does that make sense? So basically, I think that right now we are either setting up for a nice little move back up and then some consolidation, or this thing is going to bump its head and never recover. So a lot of risk there, but I do think there's also a lot of upside there. That one's going to be more slow played. We're going to really just sit and watch as we go. I really like a few others that I've seen. The one that worries me is actually I've been watching the small cap 3 times leveraged bear index, and it is looking actually pretty quality right now, which means small caps might be in for another wave of a beating, which isn't good. Nobody wants that. That's not good. Small caps, those poor little guys, get absolutely destroyed sometimes, and we really don't want to see it. That is something to be very aware of if you have a pretty heavy small cap portfolio. One that we have talked about many a times that I think is actually looking quite decent right now is Affirm. I think we very well could see a retest of like $60. I don't think it's crazy. Again, we have to get over 40 first. But if we do, I think $60 is on the horizon. Look at this. We have all this room. On the weekly, it's crossed over and it's looking substantial. We had huge volume inflows last week. If we go to the daily, we could see that today was weak, but 1, 2, 3, 4, 5, 6 days of strong buying in a row are going to probably lead us back to $18. This one's ripe for an options trade, in my opinion. It hasn't yet reversed fully. I want to see confirmation over 18, but it could make for a nice counter trade, short swing over a couple of days to make some money in the meantime while we wait for the longer term trade to set up. I really, really, really think that that's very interesting there on Affirm. And the last but not least, I do want to look at AI because I see everybody talking about it. This was a pretty significant day. I don't know if anybody saw this, but that volume was crazy. I have a lot of this in my long-term portfolio. As we can see, it ran to 183 on everyone's hopes and dreams and stimulus checks, and then came back down to $10. Got absolutely destroyed. My long-term position still red. Brutal, but there's a great long-term outlook on this company, in my opinion. I think that we really need to see this hover back up to $44, and we need to build consolidation right along there. You could see it was back in was that 2021. We were just above $44. We're consolidating between there and 60 or 70. We need to see buyers come in there and stay at the party, not leave right away. As far as breaking out from here, we've got about I wouldn't even say 20, like 31's major resistance, but I think honestly this thing's going to have a hell of a time slightly below that too, because we have not yet seen really this thing rip and run. So I'd call it 28, $29, pretty significant resistance before we really start looking at like, a longer term swing trade, which is what I'm really interested in finding right now. That's really where my heart lies. It's where I want to be. I think the longer term swing trades can definitely lead to a pretty significant compounding gain, especially when it comes to options, because when you start seeing that thing rip another 15, 20, 30%, it happens on cents because you're up 400%. When the stock moves just small increments, that compounding return is it's really something to see. It's something quite magical. But volume inflows are great here. Again, today was very optimistic for AI. Now we need to see if it opens up and holds these gains. If it does, then I think we very well could test 29, $30. And once we get over that hump of about $31, I think we have a pretty good shot if we stay above there of going back to 45. At which point, that's when I'm watching this thing for a nice $15 move. That's a big options trade. We'll make a significant amount of money. Everyone will be happy. Everyone will be rich and sexy and muscular, and everyone will be happy. I'll love it as much as Patrick will. Small caps as an indication of future market sentiment. I mean, I think yes and no. And here's why. Money goes into small caps when it's cheap, right? Because small caps are typically sold on, invention, innovation, future potential. Most of those small caps are functioning on that narrative. When money is very cheap, okay, it flows into those things because people are willing to take risk and invest. I think the willingness to take risk is more of an indication of a strong economy than anything else. However, some people tend to disagree as far as how the market relates to that. I do think that seeing another depression in small caps provides an unbelievable opportunity to buy some decent companies at a very terribly undervalued, in a very terribly undervalued condition. They're basically homeless at this point, and we'd be buying at the bottom. I do think some of those opportunities are there. Do I think that it's going to crush this market as we see it right now? No. I think consumer spending is going to be one of the clearest indicators of how strong we are moving forward if it continues. And like I said, people that can't afford to buy a house right now or afraid of the interest start funneling that money into their local economies. I think we could actually get out of this whole year, which everyone's worried, recession. I think we could escape this year relatively unscathed, and we could see a nice couple of years of stable growth, honestly. But again, I'm not a macro economist, so what the hell do I know? And that's again just speculative theory on where people will place their money if they can't buy a home because they can afford it. They just don't want to pay the interest rates, or Home prices have become so inflated, along with mortgage prices being more expensive, that they just think it's not the smartest decision. So where do they put their money? They buy consumer goods that they love. Where do you make money there? Target. And that's exactly why we brought it up. So could be right, could be wrong. Who knows? Time will tell. Um, if you guys have any charts you want to look at, now is your time to drop them in the chat. This is your time. Take advantage of it while it exists. Do it right now. Do it, do it, do it, do it. We're going to take a look at this. Dave's asking about Turka. How you living, Dave? We're going to take a look at this in just one moment. I'm going to pause for not a brief commercial break, but a brief break for the 40-something of you that didn't hit the thumbs up on the you didn't hit the thumbs up to show me some love. And you know what? I'm going to forgive you as long as you hit that thumbs up. Just click it once. Bump us up there in the YouTube algorithm. It also, just so you know, we go through each video and see how many likes it got, and that's how we determine our future content for you guys. So if you're like, hey, look, this video sucks, then don't like it. If you think it's good and this is really helpful, I need more of this in the future, make sure to slam that like button, because that's how we're going to set it up for the future to build out all the content that we publish on YouTube. It also tells me, hey, you guys are understanding what I'm talking about, and I can keep going in this direction. Otherwise, I just assume everybody's good and this is going to work out. Yeah, you guys, exactly. That's exactly it. You're throwing them out there. Well, everyone threw out like 800. Cool. But now's your time. Drop a ticker in the chat. If there's one you want to look at, pop it in now so that we can take a peek. Friends and family. Oops. I didn't. I didn't mean to do that either. I was just talking for a minute and it looks like I wasn't even here. So TRKA is the stock. Troika Media Group. This one was a huge meme stock. As you can see, it absolutely blew up, pushing from near non-existence at 10 cents, almost 1,000% to 99 cents. So almost trading at $1. Who would believe that? Anyway, this is an abysmal chart. This is a very difficult chart to look at. However, I do think that if buyers can come in, we had saw somewhat greater than normal volume here. Look, volume is nothing compared to what it was on that run, which may be normal. However, it is stronger than when we saw this consolidation area forming here. It's trading at about 17 cents. So I drew these lines on the chart. Feel free to screenshot. I think these are your critical levels. If it's above 1763, I think it could go to 22. If it can break above 22, I think 32 cents is possible, and above that 41 cents. But you've got this 200-day EMA looming and slowly cutting through the pie. This is going to be tough for it to break above 40 cents. You're going to have to see some absolutely crazy volume come into this thing, like posts across all social media. They're going to have to blow this thing up to really get any movement. And I don't think that they're going to, I just don't think that's going to happen. I think eyes have moved on into better opportunities, but it might provide some ample, opportunity to those of you that are very skilled in your craft and can day trade, swing trade, and do it well. So if you're good at that, then this is definitely a stock to watch because it can move quick. All right. Kahinde Magico Dunumi. I feel like I said that right. So good for me. We're gonna pick one. We're gonna do Baba because I love it. So we've talked about this one a bunch. Remember this gap here? I think that we can easily rip through this area and retest this gap. Now that puts us at about 95 bucks, which is also, as we keep finding out, that pesky 200-day EMA is a very important line, right? Because it's an indication of where the stock is at relative to past price and what we have as far as opportunity and likelihood, aka risk, that's going to happen again. So above 95, 96 bucks, this is the final boss right here, this resistance right here. If we can break above that, I'd be fairly confident that we're going to see some upside. What I do like, though, if you look here, what are you guys seeing here? This is why I was so interested in this chart before. That's why I took a swing trade that was not a long-term trade, but more of a swing trade, because I knew we were going to see that upswing again. before we form that final shoulder, which is what I'm hoping is happening here. Again, we didn't break. We got this inverted double top, or not inverted double. It's a double top. I was gonna say inverted double bottom. I don't know why it's not even a thing, but it's a double top. That's pretty important because it really creates a pretty thick layer of resistance to break over at 121. And if you go back to the weekly chart, you can see that 121, 107, and 121 are pretty critical. That was a resistance back here, and then again here, and then that was kind of the pivot point where this thing really broke up and absolutely ripped above 200 bucks before finding support and then finding 320 as the high essentially. So as far as BABA goes, I think we have a lot of potential. RSI is starting to coil, prices consolidating, inverted head and shoulders forming. If we see this play out and we break above this resistance, easy trade back to 140. And then I would say probably 180 if we can break above that point. I'm very interested in this chart. It's on the top of my watch list. It's just not time yet, in my opinion, to really take a large trade like that. Patrick, pick one, man. You got that many. We already did Target. We're going to do Home Depot because I go to Lowe's a lot, but I'm not a big fan of Lowe's. Wow, look at that chart. That's kind of impressive. Well, Home Depot on the weekly is actually pretty interesting, to be honest. That above 300 bucks, you got some upside, 330. That's what I'm looking at. There might be some options trades to scrape out of this. We got to hold here. This is not good. That it's really struggling right here, unless this 200-day picks up with a vengeance. This is going to be a tough chart to sell. I think that 297, 300 bucks. That's what you're gonna have to see. Even if it's above that 200-day, if it can't break above that, then I would say it's probably going to shrivel and die here. You've got a nice little trend line here, which I would say to keep a close eye on. As long as that holds, it should be good because you want to see it push above 300. Then I would say like some 330 calls could be spectacular. I think they absolutely could make some money. Let's see how earnings shakes out because that's coming up. Smoke a lot of earnings tomorrow, so it's coming back. Definitely watch that. I think that watching that play out is going to give you your best indication. I also want to see volume here. Volume profile dwindling. That's not good. If you look at it from 2017 on, we're basically hitting new lows for volume that we haven't seen except for sparing weeks in 2020 when the market was a little weak anyway. Everyone was scared. So we should see a much more significant volume profile that we don't see right now. So that would also make me not as, but again, it could be dividend because it's dividend stock. So who knows? But I would watch that. You guys are sweet. I missed you too. The answer to this question shall be revealed soon. I'm actually working back into it right now. And if you notice, I've done some more pop-up streams. I've been more involved. My goal is to get back into the trading swing. I just can't drop the ball on everything else as I transition into it because I don't want to be putting out trades that aren't quality enough that I can take myself. Because otherwise then nobody wins. So, but to answer your question, it's in the process right now, my friend. Amazon, that one's interesting. So we're going to look at that because I wanted to look at it anyway. So again, we're still following that same pattern we did talk about last week. Either this is a dead cat bounce or Amazon's going to reclaim above 120 and it's going to absolutely rip. That's my price to beat there, above 120 or I'm not touching it because it's just too, above 120 or I'm not touching it as a bull, 100%. Again, this line is very significant. This is the long-term trending support, needs to stay above this line for any type of continuation upside, at which point then over 120, pretty strong chart. I think I'd be a buyer, 100%. What else you guys got? Shirt off, smash like, hell yeah. I went on YouTube to shut the channel down again. That was brutal. Fubo, I haven't seen this guy in a while. What's this guy up to? Whoa, that's tough. It's always tough. Oh, this thing's got to get back to 242. I mean, it needs to get back above $1. Well, it's above $1, so it's staying on the NASDAQ. That's good. Or it's staying listed. Wow, that's a pretty interesting inflection point. 163 looks like that was the time to buy back in if you missed that first initial pump. So that's a pretty significant support area. I would say this thing's absolutely got to hold. Just about. Also intersects with the EMAs. You could see a nice move up. You see a lot of this kind of chart right now. Beaten to death. 200-day EMAs looming. It's ready to suffocate it. And that's basically a great target to trade for because again, reversion to the golden mean, it often will return to whatever that price is before it makes its move. And in most cases, whenever it goes to that price, breaks above, it'll continue going. If it hits that pivot point and then gets shut down, it's we're in for a bad day because there's so many of these. Josh has about OMH. So you can rewind the video. That was like one of the first ones I did. It's all right there, baby. It's waiting for you. It's just waiting for you. The doctor. Looks like I already had this one mapped out. I was doing sort of fibs nonsense, which seemed to be pretty spot. Oh yeah, because this was our long-term trade that we're going long, short, long, short. That's why. So I think that yes, if you get that 200-day EMA support pickup, you got some confluence there in the RSI. Higher low. Well, you got your low, and then you got your higher low, and then you got your low and your higher low. As long as it holds up, then yeah, I mean, this thing was really trying to consolidate above like 105, 106. And if you look at the chart overall, you're in discovery mode, which is the best thing for any chart. You want to see this in discovery mode because then price action can satisfy your wildest dreams because there's no limit. It can go anywhere. However, when we zoom out and we look at this, let's look at the monthly chart, to be honest. That's pretty abysmal. So any type of long-term trades, no thanks. Not right now, at least. You got a pretty significant support, I would argue, at like $100, and that's a pretty good psychological support. The best is when like the actual price support and a psychological number, such as like 100, very simple number, come to be, because that will I think often leads to more success in terms of holding up. Unbelievable. Back in 91, this trade for $8. Craziness. Any of the boomers that had money in the market back then and bought stuff like this, cake. They had the best. They gave themselves a good ride, my friends. We shall not experience that kind of ease, just to prepare everyone. However, it's also the reason we exist. We were born out of a need. The reason that people are here trying to learn this stuff is because you realize there's no way out. We are hitting a point in the economy, in my opinion, where dialogue time. I think we're hitting a point in the economy right now where everyone, and I mean everyone, that has any kind of job is going to need this kind of exposure. So they go to work, they make their money. What does their money do when they're not working? Well, it sits and they spend it, they lose, right? I think that in their current climate, inflation and cost of goods inflation, it's currency debasement. The money doesn't buy as much. The goods are not more expensive to produce. Just nobody trusts the money as much. So it's not worth as much. So they're not willing to take the same amount they were before. They need more. The value actually hasn't changed. It's just it requires more money, hence inflation. So I think that we're hitting a point where pretty much anyone in any industry, in any sector, in any profession needs to do this, or they will drown to inflation. They will never be able to get ahead. They might be able to keep their head above water, but they will not get ahead unless you have access to information like this where you're learning these things. It's done for you because, again, you can't just quit your job overnight and do it. That's why we do it for you. We do the research, we put it out there, you make the decision, you make your money, you go on with your day, and you enjoy your life. For me, this is about buying more time and joy. I want to be able to, in 20 years, not have to worry about money one bit. I want the money I work for now to also feel appreciated, if you know what I mean. It's kind of like your family. Look at your money. I do. It sounds crazy, but like, I want my money to feel appreciated. I want my wife to feel appreciated too. I want my kids to feel appreciated too. I want to feel appreciated too. Everybody wants it. Why would money be any different? It wants to feel like, hey, you worked for me and that was awesome. And now I'm here. What are we doing next? Like a dog. You can't just get a dog. They're so excited no matter what you do for 2 days, just to have the company. If you don't walk them and you don't engage with them for enough period of time, they're eating your furniture. Same thing. I think that's what this is that if you're in the Western society of America, you need your money to appreciate when you are not working, while you're working for it and when you're not. If you don't, I don't think wages will be able to keep up with the cost of goods continuing to skyrocket. And if they don't, then what does that mean for your life? That means you're going to be struggling all the time. I don't want that for you. don't want that for yourself. So let's figure out how you can make this work. If you haven't, again, I'm always available. Send me a DM. Rarely people do, but I'm available. And if you want whatever insight I can offer, whatever help, whatever guidance, however we walk through it, I'll do that. I'd love to do that. It's actually my favorite thing to do. And doing this is my favorite thing. But nobody ever takes advantage of it, or they do. And they're like, I didn't listen. So I lost those money and it sucks. Well, so take advantage of that. Look at that. PP coming in. I didn't know you had a second house. I love you, dude. That makes me very happy to hear. That makes me very, very happy to hear. I hope that you bought the second house just because you wanted me to be happy when you told me about it, because you love me that much, and we'll be together forever and ever and ever. But that's awesome, dude. I mean, that's case in point. Without that money appreciating in the market, it just sits and loses its value, right? Because things are just going to continue to become more expensive. So what do? Nothing. You let it rot and you lose your money. Don't. My wife said that to me one time. She was like, you either grow or you rot. And I was like, whoa, where did that come from? But it's true. And the same thing applies to self-development, to money, all of it's all the same thing. If your money isn't appreciating, you're screwed. It's better to be losing money right now while you're learning to do this, as long as you're following those disciplines and actually learning something. I would take that any day of the week over just having my money sit in cash. Any day of the week. So real quick, Stevens, Bill, is it Bill Holdings? Whoa. Interesting. I don't know what this company does. This is Bill.com. I've used them with one of our vendors. I mean, you've got really significant. This is the monthly chart. So if we're talking long-term investment outlook, this has got some very significant resistance here at $100. Strong buying support off the 200-day EMA on the monthly chart, which I would argue you can trust quite well. However, volume leaves something to be desired. Granted, we already only in halfway through the month, but we're at 31 million volume. You want to see a pretty significant uptick. You want to see like 65, 70 million volume, which would be higher or as high as these very significant candles here. Very bearish on the way down. If it's found support, I would say you're good on a long-term outlook. However, I would love to see way more volume inflow here to really get an idea of what we're looking at. Again, recent gap up after finding a low, 68.30. You got $109 on your resistance. I would say you got to stay above 103, 104 to really see something happen here. Even then, again, going back to let's look at the weekly. Yeah, 126 is going to be your problem. As I said here, I would put on the monthly chart, put these EMAs on your chart and watch it closely. You want to see one. Sorry. You want to see above, let me just stretch this out again. It's so annoying. It was at 103 and 117. I would say 120 is really your price to beat, and then 137. But from a long-term standpoint, I mean, it would I would have your cut bait be below 70. Because if it goes below 70, then I think your likelihood of seeing something like 23, $24 is possible. So you don't want to lose that kind of money. But if you're already in it and you're buying here at 73, $74, it's not like it's a bad trade as long as you're managing the risk in the position. So that's that. Oh, he alerted Fubo at $1.02. You're talking about back then or recently? Did he alert it again? Because back then that was like one of his best. I made a ton of money off his trade, dude. That was like one of that was Lee for sure. I made a ton of money. Oh wow. This was down at like 103, it's down to 96 cents. Push to 216, so it's 100%er. Bang, bang, boom, done. Love it. But yeah, sorry to miss yesterday, guys. Mother's Day. I didn't want to take away from the wife and the celebration. So we're here. We're thriving. I'm going to be, as I said, I'm going to be back more on the streams. I'm trying to find some quality long-term swing alerts that we can really sink our teeth into and make some money. And I'm just excited to be back, and I love y'all. So stay blessed now.